This is episode 11 to the Asian Session Library, and we had a great example last night of the Asian Session model playing out once again with UJ. This model is very simple and straightforward. Like any of the other episodes, it's the same exact thing that I'm showing over and over and over again. Let's jump into what we saw last night. So we know we're taking this range here, which is from 12 to 8 p.m. And the only thing that we're looking at this point is finding any buy side or sell side liquidity that we're going to use to potentially help us figure out a trade setup for the Asian Session model. This time period from this is 8 p.m. to 12 a.m. noon. So that's 12 a.m. midnight New York Eastern Standard Time. And this is 8 p.m. New York Eastern Standard Time. And this is 12 p.m. New York Eastern Standard Time. We're going to now find our swing highs and swing lows that are unbroken going into 8 p.m. or the Asian session. So as of right now, we have this swing high that's unbroken. We have this swing high that's unbroken. And then what do we label this? We're most likely going to label it the late New York PM buy stops. Yeah, that's where the buy side liquidity is residing. We'll just copy this right here. Then below it, we have the sell side liquidity, which is going to be our late New York PM sell stops. So we have one here. I'll make these blue. I tend to color code my lows blue and my highs red. So we mark out any of the ones that we can see just prior to 8 p.m. We have one over here too, all the way down here. All this is areas that the market can potentially draw for because it is liquidity. So there. And then we also have the lowest low. I will also consider that sell side liquidity. Even though it's not a swing low, it is still the low of a current session. So from 12 to 8 p.m., that is the lowest low that we have there. Now, with this model, the same thing that we always do, we're looking for some type of purge and revert. So if the market were to purge buy side, I would look to see it revert back down to sell side. Very simple. Same thing vice versa. I would like to see the market, whether or not, it all depends on what the market does. It's not like I control it, but I want to see if the market is going to purge sell side and then potentially revert back to buy side. It's all the turtle soup set up. That's all I'm looking for. So as we go forward, let's see what happens. You can see immediately at 8 p.m., price runs up and takes out what? The buy stops, the buy side liquidity immediately. Also notice the opening price. We're not going to forget that because it's very influential to what we're doing here. This is going to be the Asian Open, and anything above it is going to be in a premium. Anything below it's going to be in a discount. If I'm looking for a sell setup, I want to find a sell above the Asian Session Open. So now at this point, I would scale down to the 1 minute time frame. And I'm going to look for my classic fingerprint, which is going to be a fair value gap. So we got the open here. We got the raid on that buy side, the late New York buy stops. And we're looking for some type of fair value gap to unfold, whether or not it's the very first fair value gap or the fair value gap that creates a shift. Let's see what we get. So play it forward, play it forward, play it forward. And we got one right here. So we have a fair value gap that runs through this swing low here. So that is where the shift is occurring. So we got that swing low, mark it off, it's swing low, broken with a fair value gap, and we'll mark off the fair value gap in blue. This is where we would look to go short. Now, if I had to now set up the setup, I would go here, short right there at that high of that candle that ends the fair value gap. And I'll have a stop loss of either 15 to 20 pips or at a reasonable doubt above a recent swing high. So the most recent swing high last night that I placed my stop above was this one up here. So I had about, I think, a 12 pip SL. So let's say we go 12. And then I would go down. And let's say for a 1-to-1, it would be something along the lines like this. So 12. And you can see how this 12 runs back what? Back into the Asian session open. So that's an ideal setup. If price action is going to get pulled in one direction, it most likely will be back at the open, back to fair value, a sensitive price point. But last night, I just drew the TP all the way down to all the sell stops just to show what potential we had here, all the way down here to this low here. See if we get it on there, just like that. And if we had to measure that, it would be about 45 pips with a 12 pip SL, which is a great setup in my opinion. I'm only risking 12 to potentially gain a max reward of 45 and even more, or just a 1-to-1. Risking 12 to gain 12, risking $1 to gain $1, and that's what I do there. But notice the fair value gap here, once again, it's forming where? Above the Asian session open after running the 15-minute swing highs. I know I sound like a broken record, but it's that simple, guys. I just want to keep bringing this to the trading community so that someone out there, you know, whether it's a young gal, a young guy, whatever, they find this video and they see it and they're like, wow, this is very simple. I don't even have to look at anything else necessarily. I just follow these simple steps to find the setup. Now, of course, the setup is not going to form every single day, but it's something that you can fall back on to be consistent. I tell traders all the time, one model can change your life. And I promise you, most of the time, it's just one model that gives traders an edge. And I believe this is what gives me my edge. And I believe it can give potential other traders their edge as well. So if you look here, if you're to measure this, right, from the risk that we're taking from here up to 12 pips, let's say go up to 12. It lines up perfectly. We had to measure this out now in standard deviations. So this would be the risk. If you guys can see that, that's the risk. And then anything else below it, that's a 1-to-1. So let's say the 1-to-1 is TP1, right? Let's say this is TP1. This is how I had it broken down for the chat. And I had it different colors and stuff like that. So let's say that's TP1. And then we move it down another one. It's not going to be perfect. Change the color. It doesn't matter the color. Let's say that's TP2. And then you get the gist. You know, you keep going down. TP3. Another color. TP4. TP5. This is how my brain operates and calculates this. TP5 and how I break it down. TP5. Purple. TP6. TP6. Change the color. Yeah. So you got your risk and your potential take profits there on where you would want to scale out. You have, well, oh, it's actually further. Sorry. I didn't wrote it down. Max potential was about 65 pips. There we go. Instead of 40 and change. It was about 65 pips, risking 12. And that's what you would do there. And I say max potential because those were the sell stops that we had available during the New York lunch session. We don't trade this session because we most likely will run into consolidation. We don't want to risk that. So we just wait for the next live session. And the next live session after the New York lunch session is the Asian session. And then we wait to see how price reacts into that zone there. That fair value gap there with that swing low being rated here. And we play it forward. And you can see price hits it. You're in short now. Hits it multiple times. You're in short. And you play it forward. You can even see there's other fair value gaps here that form. So there's some type of pyramid that can occur. I'm gonna play it out to see what happens. You get into a bit of drawdown. Just want to draw out where the point of interest is. See how the candle closes above it? Because people would argue and say, oh, but what happens if you get a candle that closes above it? Would it mean that it's going the other way? That's not necessarily true. Because looking at this example I'm going to show you, we don't even go the other way here. We had two candles close above that fair value gap. And this is what we got to around midnight. So right around here. So just threading the needle of TP1 and getting close to it. But if you were to still hold your original stop and you were to hold into the next day, we can see how price continue to break down going into the London session. Notice how it's most likely going to start kicking up during what? 2 a.m. opening price, around that time period. So 2 a.m. comes around and price starts moving with speed. It's deliberately trying to get somewhere by a certain time. And TP1's hit, TP2, now we're pushing down into TP3 territory. TP3's hit. Close, you get a pullback. That's the lunch session. I talk about that all the time. From 5 to 7, that's another dead period here. This is another dead period. I don't trade. I don't look to find trades. You see, our price created engineering equal highs and equal lows on purpose. Continues to fall out. Trade lower. We go into the New York session. Pull back. And price continues fading. Ultimately giving us all TPs. And I'm not sure how much further it went, but it was definitely a significant amount. But price was able to give us a great opportunity solely off of that fair value gap here. We did have a quick rally back up, but then surely or not, that rally back up was quickly declined back down. So eventually, if you had a trailing stop, you'd be stopped eventually. We can see that it all took just that one setup and that idea based around the Asian session model. This is why I think this model is really powerful, because just more than the 1-to-1, we can also get, a 1-to-6, a 1-to-8, a 1-to-10 at times, just with little risk. Let's say you were only risking 0.5% here, and you got this. I think that would be very rewarding. Rather than you going full margin and trying to guess whether or not it's going to continue to decline. Because if you go full margin up here and it moves up maybe like, let's say 5 ticks, you're like, ah, dang, that's too much. I can't handle it. I got to close the trade. You're always going to say the model doesn't work because you don't even have the risk appetite to manage your account properly. You're over leveraging. So by the time price gives any pullback against your entry and your drawdown, you're too afraid. So you have to collapse the trade, or the trade itself is collapsed because the broker says, yo, you've overextended your margin. Risk properly so you're able to catch these setups like this and then have a trailing stop. But overall, if you are going to trail, do know eventually at some point in time the market will get you. Sometimes it won't. Sometimes you'll get lucky and won't get you, but most of the times it will get you. If you're trailing your stop, just be happy with the profits you secured and move on. Don't try to jump back in. After I was able to get around TP3, I was happy. I honestly scaled out, closed the trade, and didn't look at it for the rest of the day until around, I was in the garden for a bit. For those who know in the channel, so the snake, we found the snake in the garden. TP around 12 p.m. Sorry, around 12 p.m. I believe it was around, or like 10 or something. I was like checking the chat around London close or something. I was checking the chat to see where it went just to update you guys on that trade setup, and it declined really well. And around that same time, the DXY, if the data range, it just hit the look back high, the 20-day high. So see if we got that here. So let's see if I can show that, guys. Show you guys that here. So if you go on the daily, I know where the 20-day high is though. The 20-day high was here. It's right there. Hit that there. And that's where we saw that dollar decline off the IPTA 20-day high. But this video is not about IPTA. It's about the Asian session model. And we could see that UJ really performed today. Once again, same idea. It doesn't change, guys. Sounds boring, I know. And these videos sound all the same because it is the same. And I'm showing you consistency. Consistency comes with boring. But don't think of this as something boring. Think of it as a gold mine of being disciplined and being able to actually scale an account, or being able to actually find some foundation or structure to your trading plan. You finally find the model that you find suit. It may not be this. It may be something similar. Maybe something a little different, and you put a little spin to it. It doesn't have to be the exact same steps, but I'm just showing you exactly what I do, folks. So hopefully this was insightful. Peace.